So we've had some good data come out recently that is unfortunately resulting in some bad news for the crypto industry, especially altcoins, but Bitcoin as well. Now, yesterday, I actually did an update for you guys talking about that we were going to get rate cuts in June and July, but those odds have changed, and our odds of a rate cut have significantly gone down because of this good data that is bringing us bad news. Let's talk a little bit about the specifics here. Two main stories: Fed rate cuts getting pushed back, and issues getting some legislation through. A new Genius Act, actually, through the Senate. There's a little bit of issues getting that through for a variety of reasons that we'll discuss on this video. Welcome back. Smash a like, subscribe to the channel. To kick things off, guys, when you look at the odds of a rate cut in May, they were never good. There was almost no chance we were going to get a rate cut in May. But in June, July, we had over 50% chance at some point that we're going to get a rate cut. Now, we still have over 50% chance that we're going to get one rate cut by the July meeting. But our odds of even getting a rate cut in June at this point are only 27% now. They used to be over 60% just 1 week ago. Well, what changed? We got some good data that is presenting some bad news. Next week, in 2 days, Fed Chair Powell is expected to push back against the president's calls for rate cuts. There's no secret that the president has wanted the Fed to cut the rates to make the economy improve, to make the stock market go up, to make risk on assets, crypto and stocks, rally. That's why this is bad news. We had jobs reports come out last week. This is the data I'm reflecting on. So these jobs reports, this good data, right? Because, and here's the good data of it, right? The Bureau of Labor Statistics monthly jobs report on May 2nd showed that the U.S. economy created 177,000 new jobs last month, outpacing the 138,000 estimate. You'd think, well, that's a really good thing for the U.S. that the jobs are growing. That's what you'd think. But in reality, it actually is a problem for the Fed. It's a very weird thing that happens here. So what you got to understand, guys, is when the Fed raises rates, it slows the economy, causing job losses, okay? But reducing inflation. So again, they raise rates, it slows the economy, it causes job losses, but it reduces inflation. But when it cuts rates, it accelerates the economy. It brings more money into risk on assets, leading to job growth, but increasing inflation. And this is the key, but increasing inflation. So we want the Fed to cut rates to accelerate the economy. And of course, we want more jobs. But what we don't want right now is more inflation. And the inflation problem hasn't gone away. That's the biggest problem that we're having right now. So while this sounds like good data because we have job growth, we're still having an inflation problem, so we're not ready for job growth yet because of this right here. When it cuts interest rates, it accelerates the economy, leading to job growth, but increasing inflation. We do not want increasing inflation right now. This is the big predicament that the Fed is on. So this jobs report threw cold water on the idea of the rate cut in June, which we expected. And maybe even now for July, we're looking like we're not going to be able to get a rate cut, maybe even in July. Still over a, what is that? We just looked at it. It was by July, a 55% chance that we'll have 1/4 point cut by July, but only an 18% chance that we're going to come down 1/2 point. Now, you don't want them to prematurely cut these rates, guys, because you don't want inflation to get worse. And with tariffs going on, it causes extra concern with the Fed and any moves that could put us into a position of worse inflation. And then in addition to that, you've got the tariff fears that could make inflation potentially even worse. So again, I've said it many times in this video already. You have some good data, jobs growth increasing, resulting in some bad news. Bad news for crypto and risk on assets. We've also got these stories coming out right now. Elizabeth Warren slams Genius Act over Trump's USD1 crypto profits. Recently, there was a deal between World Liberty Financial and a UAE-based MGX for this stablecoin deal. The deal used USD1, World Liberty Finance's stablecoin, in a $2 billion Binance transaction. Really getting some use behind this new stablecoin. And you have people pushing back on this USD1, saying that, there could be some foreign influence that's going to creep into the government if the president is associated with this thing. And so now you've got people criticizing the pro-crypto president over his moves in crypto. And then you've got this story as well. Trump's set to raise millions from crypto and meme coin this month. He's actually got two events coming up. One, the Crypto and AI Innovators Dinner. It's $1.5 million per plate with the crypto venture capitalist David Sachs, his crypto czar, at this. So you can buy a seat at the table with the president for $1.5 million at this fundraiser. Also, if you had recently bought the meme coin, there is actually, and I misspoke on this earlier, but the top 200 holders of the 220 holders of the Trump meme coin are actually going to be allowed to go to a private dinner held in DC at one of his other locations, where he's going to allow people to then have a seat with him there. And so again, this leaves the question of, well, who is going to be able to get access to this dinner, including possible foreign nationals. And so now there's all these questions going on. Again, good news, or good data, right? Or bad news. Good news, bad news, actually, is more so what this is. You've got a pro-crypto president. You'd think that that's a good thing, but now we're kind of getting some bad news out of it. Crypto's in a weird spot, guys, but I want to tell you this. I'm bullish on it in a very big way. The price of Bitcoin is currently sitting at 94,000. If you look at the trajectory of this market, it just seemingly keeps going up. Crypto is at the center of the stage here in the world of finance. When it comes to the hottest, newest thing, crypto is it. You have Michael Saylor buying millions of dollars more worth of Bitcoin in the last day, as well as BlackRock now holding over 400,000 Bitcoin themselves, a tremendous amount of Bitcoin for one of the largest asset managers in the world. Eventually, the Fed is going to cut rates, and eventually, we're going to see this market continue to the upside. If you had sold out during the 2021 pandemic crash that we had, then you would have regretted selling out early and missing the best part of the bull market. And I have a sneaking suspicion that the best part of the bull market is coming soon. And people that are giving up now, even with this bad news about rate cuts, are going to be kicking themselves down the road, especially when it comes to Bitcoin, but for altcoins too. I think what could happen over the next few months is Bitcoin dominance continue to surge up to 72 or 73%, and then eventually rejecting and then having an altcoin season right around when the Fed is actually going to start cutting rates. And I still do think that that is going to happen later this year at some point, even if the odds are a little bit shifty. We're going to keep a close eye on it, though. I want to give you guys the update on some of these stories that were breaking today. I thought they were quite interesting, so I wanted to share my take on it with you. That's all I have for you in this one. I'm Crypto Kip. This is the Crypto Report. Smash like, subscribe to the channel. If you want to do some trading, you can sign up for Blowfin using our link in the comments down below. Blowfin is a great place for trading, leverage trading, and spot trading. If you want to check it out, it's in the link for you. I'll see you in the next one, y'all. 2 videos here. Peace, guys.